For technical analysis of financial markets, you should know how many chart types there are and how we can analyze them. As you can see from this part, we can reach different types of charts. The three most common types of charts that traders use for their analyses are line charts, bar charts, and candle charts. 90% of traders, including us at SinFx, use the candle charts because they display the most amount of information. So for our charts tutorial, we will have a general look at line and bar charts, but we will have a detailed study of candle charts. In all financial charts, the horizontal line represents time and the vertical line represents price. As you can see, line charts don't really display much information other than the price and time. For example, here on December 15th, 2021, the price of gold was around $1,700 USD. Before we explain bar charts and candle charts, let's take a look at what they're made up of. These two types of charts contain bars and candles. Each bar or candle contains 4 pieces of useful information for us: the open price, the close price, the lowest price, and the highest price. If the close price is higher than the open price, the bar or candle is upward and we call it bullish. On the other hand, if the close price is lower than the open price, the bar or candle is downward and we call it bearish. The highest price tells us that within this specific time frame, the price touched this level, but sellers had the power to take down the price. And the lowest price means that at this specific time frame, the price touched this level, but the buyers had the power to push the price higher. The difference between bars and candles is that candles have a body between the open price and the close price. So visually, studying the candle is easier because at a larger scale of the chart, we can have better view. As you can see, this is an example of a bullish candle. In this one, price opened here, went up to this point, went down to here, and closed at this price. These are other examples, and these are bearish candles. As you can see, the price opened here, touched this high, went down to here, and closed there. Each of these candles open at the start of a time frame and close at the end of it. What is a time frame? From here, we can change our time frame to daily, 4 hours, 1 hour, 30 minutes or less, and even weekly and monthly. For example, in the 1 hour time frame, candle opens at the beginning of the hour and it closes at the end of that hour. The combination of 4 1-hour candles makes a 4-hour candle, and the combination of 6 4-hour candles makes a daily candle. Let's check that out closely. These 4 candles at a 4-hour time frame make this daily candle. Or here, these 4 1-hour candles makes this candle at a 4-hour time frame. So now you can get why we have high and low at a candle. For example, this high at the 4-hour time frame means that the price touched this price at some hours or minutes of that specific time frame. Well, that's enough for this session. Don't panic, it's not that hard. You will definitely get used to it. Just watch this video a couple of times and practice a little on charts, candle by candle and time frame by time frame. For reaching the charts, you can see that I use tradingview.com. This is a credible and professional site, and it allows you to access all Forex, cryptocurrency, or stock charts. So make a free account in it and practice reading charts. We will talk about finding the trends in the next Forex tutorial video. Thank you for watching this video. Don't forget to subscribe, like, comment, and share our content. And tell us about the things you would like to know about.